Boom. We are alive, ladies and gentlemen. Thank you for joining us today. Steve with the Arcane Bear. Stoked to be back. Another live stream for you guys. I thought I was going to do pre-recorded videos. And anyways, the market really hasn't done much. But I wanted to make an update as things became clear this last week or two. And this is one of the difficult parts I find. For, investing is actually quite easy. If you find a good asset, you can just invest in any good asset for a really long time. The problem, though, that I had is I wanted to understand the markets when I first dove in. I wanted to know why things worked the way they did. And then I wanted to find out if there are any repeatable patterns within the markets that I could identify. Discrepancies. Often people would call this arbitrage, but can you see more clearly than other people? And in 2020, I guess many of you will remember 2020, 2021, something really strange happened. Something I didn't see coming necessarily exactly the way it played out, but it revealed a lot to us. I believe it revealed that we are basically in a war and you're dealing with criminal governments across the board, allegedly. I got the legalese of allegedly. It's important to understand here. But what it did, it taught me something that I hadn't yet experienced in the marketplace. Now, there's a saying, it says, buy when there's blood in the streets. And if you follow me on Twitter, which I suggest you do, I've said things like buy when others die, or there's not enough people dying for me to be bullish yet. And this kind of sounds arrogant and sociopathic. But one of the things I learned from the market is that the market operates in the opposite of human emotion, because that is what it's taking advantage of. So for the market to be, again, one of my favorite things about studying the Wyckoff methodology was this heuristic, which is that comp man, or the composite operator of the market. If you view him or her, whatever, it doesn't matter, your choice. I'll be a pretty hot market maker if it's a she, I guess, right? Anyways, the point of this is, if you view the market operator as a single individual, it's not all of the scattered individuals throughout the market, from Michael Saylor to the first time a 18-year-old kid is buying their bit of Bitcoin. If you look at them all as one person, the markets start to make a lot more sense, because they're operating off of human nature, which itself doesn't change. But it's the hardest for the individual to combat in recognizing the nature of oneself. There's this old quote, I don't know, maybe it's a Buddhist quote, but it's like, know thyself. I'm pretty sure most religions would go down this avenue of some, know thyself, my son, is a pretty important one. And often what we mistake is the part of us that is the tyrannical leader or the sociopathic killer. Because effectively, as a human, you have all of those parts in you too, even though they might not reveal themselves at the moment. Most time things are situational. Would you kill if you had to? Or what were the circumstances under which that would take place? It's not a question most people ask themselves. It's one of the reasons why most people fail in the market, is because they don't understand what they're up against, which is themselves, effectively. Anyways, I use this long-winded rant. Oh no, I'm frozen. Let's see here. I gotta find a way to better. I gotta find a way to better. Did that still not fix it? Whoa, what's going on here? Oh no, this is super strange, fams. Let's see. Dang, on the live stream, hey? Worked perfectly fine for everything before. And that's an old, how does that even happen? Oh no. Okay, yeah, all maybe if I unplug. Dang. Always some technical difficulties or another. Hey, there we go. Okay, I'm back. Good. I'm glad I got to finish the rant before I realized that my screen was frozen. Hopefully the audio came through, because I was pretty stoked about that rant. Anyways, I hope y'all heard that, even though my face may have been stuck in an inanimate space. I hope you heard the words. So that brings me to a chart. What are we charting? We're charting human emotion. It's one of the hardest things to recognize, is ourselves in life, in everything. It's actually a rather divine moment when you can get there and then repeat the process. So number one, there's a few things I wanted to go over. This falling range that we're seeing here, I've seen so many times as the backup phase. If you've been following me for a long time, you'll know that this is a repetitive pattern that shows up frequently right near the finalization of the SOS and the backup. And then what it does a great job of doing is deceiving people, because it deceived me for the first little bit. This looks like distribution. This can easily be distribution if you're on a totally horizontal range, which is normally how we like to look at everything, right? So any closes below here would generally be a sign of weakness, and then a movement down further. Somewhere, let's see if I can get my drawing tool here to work. I got so much stuff. Somewhere to maybe even lower, right? A lot of the times people would just accept that we're going back to $12,000 or something, but that's not the case. What it appears to me is, though, that we are in this horizontal, this falling accumulation range, which is designed to be deceiving on purpose, because human emotion needs to be deceived through things that are happening, which is why often you're like, oh, someone dropped a bomb, then there's and the market went down. But the market was going to go down regardless if people dropped bombs or not. Now, this is counterintuitive, I know, but you have to look at the system as one giant unified thing, not just CompMan now, but all of the universe is operating as like one, let's call it one cup of water. If you move the cup of water, everything inside the cup move. Can't get away from that. So what we're witnessing here is kind of like the cup of water of human emotions. And you can see it happening in all of the assets. Here's render. Here's near. I'm actually looking a bit stronger than Bitcoin at the moment. Fetch also looking a bit stronger. Same with render, depending on how you look at it. Solana through a falling range, and Avalanche, two falling ranges, kind of identifying the finality of what would become the jump across the creek. So I think what we're about to see for Bitcoin is the final test to the downside. And I think what we just witnessed prior, this nice run up, was a low volume spring. So this is really important for the new person to understand, is that supply is a mechanic. One of the amazing things about Bitcoin is that the mechanic of the supply is fixed. Aside from if people lose Bitcoin, the mechanic is fixed. Or if something maybe goes catastrophically wrong with Bitcoin, where you can just double print and spend more Bitcoin than there actually are, which has happened in the past. Not recently, but it has happened. So barring that, these tests are usually then coincide with something. What was interesting is that about a week before this happened, I was like, look, we're looking like distribution. Some type of downward spring here is likely. I think $52,000 is kind of where we're going to land. And that ran us almost to the truth. Now, we still could see that. But this low volume supply signature where we have very low supply, again, this mechanic is driven by the demand. Now, the demand is the part that we're actually interested in, which is the human emotion aspect of, is something good and do I want more of that something? But right now, Bitcoin cannot close above the top of this falling trading range, nor can it get above our beautiful bear claw. Now, this expanded exponential moving averages and our two slowing moving averages represented by the green and the blue here is we give away for free. You can download it by going to our TradingView account. If you use TradingView, if you don't, I don't know. I think the original name is the Super Guppy, and all it is stacked exponential moving averages and two slow moving averages. Really easy to recreate and draw up your own. We drew up our own here using a bunch of Fibonacci numbers instead of the standard Guppy just uses 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, etc. We use numbers a bit more abstract in their changes, like 3, 5, 7. Anyways, point of this. The low volume spring that just took place will likely lead us down to a test. And one of the things that's super awesome about this, and one of the reasons why I like to wait for trading ranges to form, is it can give you a much higher level of confidence just being patient. There's an old saying, which is don't catch a falling knife. And that happens because people largely don't know where they are in the markets. You might buy thinking you're at the bottom, but you haven't found that bottom yet. Waiting for a trading range to form, which is what we've seen now come much closer to a conclusion, gives me way higher confidence of where we're going to go next. Now, in the early part of this market, way down here, when we were way back here, when we were around 47,000, I thought we were going to test 30. I think I said 36,500. Yeah, so I thought we were going to come down to here, 36,500. You can go back to the video and see that. Yet we only came down to 38,700. So a little bit higher than the initial downtrend that I thought we were going to hit. This time, the same thing may have happened. Here, I thought we were going to return to 52 because that's where the point of control for this particular breakout is. 57 may have been the low. Now, again, I don't want to try to pick bottoms exactly. It's much easier to wait for the form of the trading range itself. So for here, when we didn't hit 36K and we jumped back above the bear claw, this would be what would be effectively called a jump across the creek for this trading range. I just went long everything. Now, the reason being is these changes of character are much more the level of confidence and the patience you have to have for only, like, people are like, oh, but you missed 6% of the trade. Well, that's totally unimportant to me. I would rather have a much higher level of confidence for the thing I'm trying to execute. Now, if you're in a spot position, it doesn't really matter. You should just be buying day in, day out, every day that you can until the bull market is over. It's not over yet, but it's going to be soon. And that's important to remember. It's highly likely that this next up cycle, wherever it brings us to, is the last part of the upthrust of this cycle. And we see more reaccumulation within whatever range is going to be built. But for now, what's super awesome is that we've got the confidence now of likely what's going to happen. So I think we're going to see a test of the 200 simple moving average on the 12-hour. We could still test it lower, but the supply on that last spring was low. So I imagine the supply on the selling side also low. There's a lot of people buying up here. This would be considered a bull trap in small formation if you're playing leverage, because it's very likely that it's going to come down maybe, let's see here, 5 to 10%. It's going to try to push exactly to where we were in the spring. And then what it's very likely is that this is going to look like a perfect inverse head and shoulders. Something like this, right out the bottom of the secondary test, the low volume spring, and the finality of this test here before we jump across the creek, test that creek, and go up to new all-time highs for Bitcoin. So every now and then I like to test ideas out as well. So I was kind of flirting with the idea that Bitcoin could go to $30,000 based off the liquidation heat maps. Sometimes it's good just to voice your opinion, even if that's not what you believe, because unless you say it out loud, you're not really sure how stupid it sounds or not. And again, this is also why I like to just wait for patient confirmations, because this low volume spring here, oh no. Oh, yes. So just to reiterate here, the secondary test, the low volume spring, and what I believe is going to be the next test is going to look like a perfect inverse head and shoulders, in my opinion. It's very likely that that's the case. It's going to fake people out too. It's going to try to push all the way back down to that $58,000 previous low. It's going to dump just as much supply into the market as they've accumulated, which we haven't seen yet. And once that's done and we hold that test, there's some key indicators I'm going to be using. Number one, the bear claw we've made here is amazing, but I also like to use these for, as the market gets closer and closer to a finish, I like to use things that more indicators than I normally would, because the extra data is very helpful. One of the top ones I like to use is the stochastic RSI, because it shows you where you are in the market structure regardless of where the RSI is. Now, when you have alignment in all 3 or 4 of these, this is usually the best time to enter a position. It's kind of the easiest too. As you can see for the low volume spring, just as an example, for the stochastic RSI, the MACD, and the money flow, we were all below the reset line for every single one of them. That's usually a great place to enter, and the best place to get out of those positions. If you are just looking at a shorter time frame, again, I don't think Bitcoin's going down to 30K. I think it's going to test 58, maybe even do 52 just to fuck with everybody. But for now, it's much more likely we go to 52. And there's a few reasons why I'll go over in the next bit. But when you have the stochastic RSI in the oversold conditions, this generally means oversold everywhere. So we're in overbought conditions for Bitcoin at the moment. I would love to see a reset of the stochastic RSI on some of the smaller time frames. Let's see this, like the 6 hour, which it's getting really close to. So I suspect that we're going to have some jumps like this where we test the stochastic RSI once or twice. But more importantly, the next buying scenario I'm looking for is also going to do the same. It's going to definitely reset the stochastic RSI, which has happened. It's going to definitely also reset the RSI because it wants to. The market operator plays a pretty simple game when you learn to think like a sociopath. I don't know why, but if it takes practice, and I don't try to think like this everywhere, it's just like a very dedicated area. So the MACD is still above, and the money flow indicator is still above the middle line as well. So when those reset, even if the price doesn't come down, and they usually do right before they break out, we can go back and look at a bunch of instances where this happened. Even on the right hand side of the screen, you can see that the RSI was oversold on the 12-hour for Bitcoin for like a massive amount of time. And this is the stochastic RSI, more importantly, and even on the money flow, not on the actual RSI or the MACD, because we're on larger time frames. But from there, I like to scale in. But more importantly, again, what I'm trying to highlight is that it's very likely this test is going to bring us to around 58 to 59,000. I've actually always aimed just a little bit lower than I thought than we ended up going. So if I say 57 or I say 52, think like $4,000 higher. I don't try to pick bottoms either way. I'm just looking at ranges here. And for fun, let's take a look at the VPVR, because we are stuck right below the point of control at the moment. Once we break above the point of control, which is usually where you get what's called the jump across the creek in the more standard Wyckoff methodology, which is kind of where we are right now. So again, I think we come back to test the 212. We jump across the creek. We probably run up to around 67,000. We come back down to test 64. We build like the tiniest, weirdest little range here. And then we basically go up to 80, 85 grand, come back down to 75, and then we're on our way to new all-time highs. Now, again, this is all dependent on the fact that we hold this test area. If for some reason we break the test area, we're coming down to 52.47 to get our final kind of area here. And maybe we see a higher volume spring. But for now, the reaction of absorption off that previous low on low diminished supply looks like a spring to me. So there we go. Spring. Test, the jump across the creek. These are my favorite places to find confidence in positions, and they're across the board too. And some of the most bullish here are the AI sector. So I've been watching the market for the last few weeks. I shared this with the private group the other day. This seems to be the strongest sector. Render, Near, Fetch, Solana are outperforming the majority of the market by a substantial amount. Render is probably the highest. Near and Fetch, the next kind of beta to follow along. And I think this is important for a few reasons. Look, if you're looking for just constant, steady, stable investments, Bitcoin's still our North Star guiding light, has been for the entire time I've created this channel. If you like fucking around and finding out like I do, being speculative and seeing what's out there, the AI sector's narrative is very easy to understand, and I didn't realize how far along we were until I started playing with more of it. And it's developing so quickly. And I think crypto is one of the best situated for this. I've talked about this in some of my previous videos, that you're going to need cryptographic proofs in a world of infinite fakes. And whoever can figure out how to do open source tokenization of compute in the AI sector will be one of the dominants. They will receive a massive amount of funding. Now, Linux was never the best server. Most people don't use Linux, but it gets used a lot still. So just because you don't use it doesn't mean it's not used a lot. I don't use a PC, but there's a lot of people that use PCs. Almost all gamers will have a PC, but I don't, because I mostly make music and video. So I've had a Mac my whole damn life. So what am I getting to? If you look at Fetch, this looks like a perfect. Let's remove the bear claw and the exponential moving averages, and let's get our VPR to refresh here. This to me is starting to look great. Now, if for some reason, again, we get rejected and we break below here, and which I'm waiting for my leverage plays here, but spot positions are largely still intact. Anyways, I think we've hit the top of the creek, which usually goes something like this if you draw it out roughly, and comes right to the point of control for the range that we're following, which is right around 2.6 effectively. If I get rid of the rest of this, here we go. There we go. So we're right below the creek. This is usually where the finalization of the test takes place. We jump across the creek, we come back down to test it. You build a small range here, and then you go to new all-time highs. And again, there could be an or here, which is that we fail this, we break below, and we can't get above the previous range. Now, I don't think that's what's going to happen just by how everything looks at the moment. It does look like we got our spring, and it does look like we got our test for multiple assets. So I'm just going to continue to show you what that looks like on other areas. Near looking very strong, in fact, stronger than Fetch. If you want, you can go and watch the podcast I did with the founder of Near Ilia by just typing in Near Ilia Arcane Bear. I believe it'll show up, or it's under the podcast. For Near here, I'm going to leave the bands on just for a moment because I think it's going to help provide us this next test, because it looks like we may have already jumped across the creek for Near. What I would love to see here is a retest of the point of control, and maybe even the exponential moving averages here, or sorry, this green expanding band that I call the bear claw. And as the claws expand, you get higher and higher to risk situations. The other thing that's telling me there's more downside coming is that the stochastic RSI is already oversold in overbought conditions. Both the MACD and the RSI are heading in that area as well. I would like to see the stochastic RSI totally reset on the 12 or 6 hour, which is looking like it wants to do now. That's where I'm going to be playing around with how I would want to look at with both of these. It's a little, it looks a little bit better for horizontal, but I liked the falling range itself. I think it's a little bit more indicative of where the creek is at this moment too for render, which basically fell right along the top of this range. So I think we've just jumped above the creek now, and we're hitting the top area of resistance within that. I think we're going to come down to around 9.3, try to touch the exponential moving averages as they move across the creek themselves, and then we're going to go to new all-time highs for render, Near, Fetch, and many of the other assets. Solana also in that very similar falling range, but again, if you compare the growth, at least from the test to where we are, 32% for render here, we're at almost 60% upside from the test to its reactionary movement. It's highly likely that the strength that's in render is going to continue, not just to exceed Fetch and Solana, but Bitcoin as well. So word to the wise, Bitcoin's the best investment, but render has the highest potential for gains in this next move upwards, followed by Near, again, already across the creek, and Fetch, who's right on the verge of jumping across the creek now. And this is not the greatest structure. It's a little bit more complex than I would like here, but it does effectively look like you've had a falling range with the creek that rolls right down to about here for Solana as well. So that's generally where we are with the markets. You can go do this with everything. Here is ETH without any of the markers drawn, none of the volume or supply signatures drawn, and Avalanche as well, with some of the old ones with none of them drawn. If you want to go back, it's great educational practice to go through and try to find previous reaccumulation ranges that have taken place, accumulation ranges that have always taken place, and then kind of work from there. Don't work from trying to chart what's happening right now. It's usually easier to start with what's already happened and see if you can notice the pattern of trading range, supply, and demand signatures, because they're two very separate things. Again, the supply and demand signature importance is understanding the result to effort in demand, so how much supply came in and how much buying had to take place for the price to move up compared to the price to move down. So it's known as effort versus result, and it helps you identify springs and tests really easily. So it takes practice. It's not easy to just give to you in one moment, but I'm sure those of you, actually I know for a fact, those of you that have been in the Arcane Bear private community for the last 2 years are killing it. I've had so many great messages from you guys over the last few months. So patience with wherever you are, and understand that right now we're in a really interesting time too. So here's the S&P 500. This is kind of where we're going to leave it off, the S&P 500 and the DXY. I've been singing today, so my voice sounds super low and kind of crackly. It's really interesting. I sing in like a really low voice. I have a high voice too, but I usually sing in a much lower voice. So my voice is a little tired. So the S&P 500 here fell out of its range, but on the 12-hour, we've held the bands. Just to go down, we can kind of scroll through here. We'll go down the bands. On the 6-hour, we've held the slow moving average, and we are right at resistance now. I suspect that come the market open over the next few days, what we'll do is we'll look stochastic RSI oversold, RSI getting into that area, and the MACD on the 6 hour also getting that oversold area. You can see we're starting to turn around as we go more lower and lower into the time frames, that we are in totally overbought conditions and about to turn down. And you can kind of see where we're going to find likely support. So same thing, looking for support to hold here for the S&P 500 and then continue upwards. Once we're above this, oh my God, it just go long everything, because they're going to print so much fucking money for whatever reason they can come up with next. If for some reason, and just in case, because it could get weird, if you start to close below here and below the bands for Bitcoin on this trading range where we do come back down to 52 and we can't get back above the test, just in case, just to be aware that that's a potential, then we're going down to 30 grand. But again, I think that we're just going to, for now, test the $58,000 point and continue higher. And the reason I think that is because it just looks like so many assets have already jumped the creek now, the strong ones at least, like Render, for instance, or Near, or Fetch. Many of the others have not, because they're just not as strong. Like, for instance, Ethereum has not jumped the creek yet, and is actually holding below the band. It doesn't look great for Ethereum at all. But again, I suspect we're going to get a low volume test, a jump across the range here, and then a move across the creek, and we'll continue higher. But again, if we don't, for some reason, if we start to close below bands and shit, Jesus, and more specifically, we'll see it in the traditional market start to turn too. But for now, I think they're just going to print, and there's some evidence of this already too. If you look at the M2, and if you just kind of pay attention to the background conversations around bank insolvencies and all this other stuff, which I don't really want to get into. But nonetheless, I'm going to finalize it by taking a look at the DXY. Back on the daily here. So the dollar still does appear to have strength in it. It appears to be moving up. It appears to have jumped across the creek and is testing that creek now. It would be really nice to see an SOS at that point. It's going to be really interesting to see how these two collide with one another. The dollar could actually come a bit lower first, but even as you can see here on the daily, our stochastic RSI is totally oversold, but the MACD is headed down. So hard to pick it at this moment. The dollar still could come down a little bit lower before going higher, which will likely coincide with the breathing room that Bitcoin is going to get over the next little bit. This has been a really deceiving range for the dollar. I don't even really like to pay attention to it because it looks more obvious where we are in the rest of the market. So I try to ignore it because I'm not sure how much it means anymore. After learning, sorry, I didn't even have the dollar chart open. After learning what I learned about the way they fluff statistics for excess deaths, I have a hard time trusting whatever it is they say the dollar is necessarily. Bitcoin's a little bit easier. Same with the whole crypto space, a little bit easier. Even with the S&P 500, it's technically fucking ridiculous. Like if we go out to the weekly here and we look at the S&P 500, it's one of the, I think the most incredible things here is witnessing what real-time inflation looks like. And for those of you that are new, because I know there's probably some of you, what I like to do is I like to compare it against the M2. So here's M2. And this is the S&P 500 versus M2. Now, all of this totally insignificant changes, which are usually perceived as bear markets here, which was a down 50% twice for the S&P 500 rolling into the 2000s. Aside from that, we have been in a straight up market cycle because they have been printing fucking money. Your assets are worth more, not because they are more valuable, but because more money has been printed, therefore decreasing the value of the dollar. This is what inflation looks like. It doesn't really matter what bread costs. Those are the very fucking last things for inflation to hit, because they're only the things that poor people care about most, which is what does bread cost, or electricity, or food. So, and again, as you can see here, even on this weekly time frame, the M2 is ticked up. So look, M2 sell-off, accumulation, and a tick up for the M2 here. And look what this tiny tick up has done here to the markets. Huge. This is huge for the S&P 500. And you know, one of the reasons why is because the average person already doesn't own fucking anything. So their whole goal of trying to make it sure that nobody own nothing and be happy. Most people already own nothing. Most people already are in debt or have no money to their name already. So their game is well on the way. They want asset prices to continue to go up because then they own everything. So don't think that this is the end of the market. The market is going to continue higher. I've stood by the market melt-up thesis for a long time, and we've only been proven right as things go on. And that's what we're witnessing with Bitcoin. And that's why Bitcoin is not an inflation hedge as people understand it, because it's not a hedge against the inflation of the price of bread. It's a hedge against the inflation of the monetary supply, which it has also directly benefited from the same way you have with the S&P 500 here. I'll take the rest of take the bear claw off, and I'll even put it to an area indicator so you can see how these two, they're basically, the S&P 500 would not have increased without the M2 increasing. Anyways, this is Steve with the Arcane Bear. Thank you all for joining us today. If you are interested, just for shits and giggles, I actually posted something. I'm going to share it with you, but please follow me on Twitter. I'm starting some vocal lessons soon, hopefully. And I shared some vocals I've been working on. So if you haven't seen this yet, does it work like this? Can I do that? Oh yeah, I don't even have to have the volume up. Awesome. Yeah, it should play the volume by itself. Anyways, it sounds like I might be actually working on a new out. Oh, my damn camera frozen again. I gotta figure out what I can do to fix that. Anyways. That's why screen share. I should just have done this, right? I should just full screen this. Anyways, this is Tio with the Arcane Bear. Thanks for all for joining us today. I'll see you guys in the next episode and hopefully fix my damn cameras. If the live stream kind of went smooth today, I think I can fix it. I keep wanting to pre-record and then it's just not fun. Anyways, this is Tio with the Arcane Bear. Thank you all for joining us. See you in the next episode.